we take a look at how the markets are performing on this day. The local index is little changed today, while global markets are mixed as COVID-19's resurgence weighs in on investors' minds. Michael Treherne, who's portfolio manager at Vestact, joins us now to talk through the latest market moves. Mr. Treherne, good to have you with us on the Daytime Update today. Perhaps let's start with you giving us a sense of how the markets are performing so far this afternoon.
Yes, afternoon, Tommy. Markets currently down 0.3%, and that's in line with global markets. It seems it's a bit of a risk-off day as we're talking. Unfortunately, that's been bad news for our markets, and the rand has continued to look weak, currently at 15.78. But that's actually more a dollar story. The dollar's looking very strong now that we've got the Fed chair, Jerome Powell, confirmed for another 4 years.
Now, when we take a look at gold prices, they're hovering near a more than 2-week low, while oil falls amid talks of the tapping emergency crude services, or reserves rather. If you could talk us through the latest moves on that front.
Yes, so gold's had quite a strong 2 or 3 weeks, and that's on the back of very high inflation numbers coming out of the Northern Hemisphere. And gold prices generally do well when inflation picks up, because it's seen as a way of avoiding inflation if you buy gold. More recently, though, we've seen central banks say that they're going to be harsh on inflation, and they will increase interest rates as need be to keep inflation under control. And because they want to keep inflation under control, the price of gold has softened a bit. In terms of oil, the demand and supply metrics there are very, very sensitive. So to see key countries like China and the US release emergency reserves into the market increases the amount of supply that we see, and that's what's pushing down markets at the moment.
Now, COVID-19 has hit Momentum Metropolitan's quarterly profit. Talk us through the numbers there.
Yeah, so it's not a bad set of numbers coming out. As you said, COVID coming in hard. And that's been the case with all insurers so far. Metropolitan saying that in the last quarter, they basically paid out the equivalent of a year's worth of claims in a usual year. And that's because of the third wave of COVID coming through and hitting a lot of their clients. So it has been tough, but management points to a very strong pipeline in terms of new business. They've seen new business increase 28% over the last quarter, and that's very good news for the stock long term.
Now, PPC has almost tripled its profit in its 6 months to end September. Talk us through how they have fared for the period under review.
Yes, so PPC is currently under restructuring, so it's a bit difficult to look at the numbers like for like. But effectively, they grew sales by 20%. They did that by increasing prices slightly, but also by selling 12% more cement than they did in the previous quarter. What's encouraging is they've managed to get these price increases coming through, but they've also been able to reduce their expenses. And as a result, their profits have looked very, very juicy. Unfortunately, they're not paying a dividend yet because they're still in the midst of restructuring. But management did say that they're not going to need new money from shareholders to complete the restructuring, and that's very, very good news. Unfortunately, investors were looking for a bit more, and the stock's actually down 2.8% this morning on the news of these results.
Michael, that is how we come to the end of our market update for today. Thank you so much for your time. Once again, that's Michael Treherne. He is portfolio manager at Vestact.